Good morning, everyone. Welcome to Stock Market. Today it's Tuesday, July 14th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities mostly lower in Monday's trading, ending near the worst levels of the day after a big reversal. The Qs were up over 2% at one point before closing more than 2% to the downside. Big reversal. Afternoon weakness led by the growth and momentum stocks that have been leadership. Tech, comp services, and discretionary all underperformed on the day. Healthcare, industrials, and financials outperformed on the day. Treasuries were slightly stronger across the curve. The dollar was better against the yen, but it lagged the euro. Gold was up 70 basis points, and WTI crude was down 1.1%. As we get to the desk this morning, futures are up about 20 basis points to start the day after Asian equities were mostly lower overnight, with Hong Kong leading the declines, down over 1%. European equities are under pressure, with France and Germany lagging. Treasuries are unchanged to slightly stronger. The dollar is mixed on the major crosses. Gold down 1%. WTI crude is off by 70 basis points to kick us off on a Tuesday morning with bank earnings getting underway. Bank earnings getting underway today. JP Morgan out this morning with results that look like they beat expectations. We'll have to wait for the conference call. But the S&P 500, big reversal at resistance to close near the lows of the day. There is that resistance zone hanging tough. Have not been able to break through yet. 3,000 to 3,100 support to the downside. Below that, 2850, 2950. Feb highs still in play, right? No change, right? Big day yesterday. Today will be telling. A follow through to the downside likely pushes back to test support at the bottom of the range, right? Big day yesterday. Resistance 3150 to 3250. In the near term, hold up. We are overbought based on that 13-period CCI and 3-day moving average of it. What's interesting to me is on yesterday's test of the early June highs, lower high for the indicator. Chaikin money flow, bullish. But on yesterday's test, lower high, right? Those are divergences at the indicator level, right? To me, I think today becomes an important day. Today becomes a day where we need to see stabilization and a hope. And if you're really bullish, you want to see another attack on the top of the zone. If we do get follow through to the downside, these divergences on the indicators come into play. You got to start thinking about a trip down to the moving averages, down towards support at the 3,000 level for the S&P 500. So that's it, folks. That's your game plan, right? Markets are overbought. We have some divergences. Growth is stretched to the upside. Go back to yesterday's show, right? We were talking about it. I wrote about it on Sunday. I wrote about it again yesterday. I'm writing about it in a note today as well, right? So the key themes are stretched to the upside. Let's talk about our market in a minute. Resistance holds as SPY fades from the day's highs. We hit that pretty good on the last page. The Qs. QQQ goes from up 2% to down 2% as growth and momentum lag. That was big. Banks are bearish and lagging as earnings season begins. We'll take a look at KBE, and that's playing out as the financials are testing key relative support. Futures point to a higher open today, as I said. Let's look at the major indices now. From a power bar perspective, not a ton of change yesterday. A little bit of deterioration for the SPY as it lost 88 basis points. The Dow was actually up on the day. It was up a lot more, right? All of the major averages reversed hard to the downside. So the Dow added on 8 basis points, 5 to 9 bulls to bears there. SPY or S&P 500 up down 88 basis points, 103 to 109 bulls to bears. NASDAQ big underperformer as growth and Mo came under pressure. Look no further than a name like Tesla to give you a sense of how it played out yesterday. NASDAQ down 2%, still 32 to 11 bulls to bears there. Small caps down 1.25, 498 to 340. Bonds upticked in a flight to safety, sending yields lower according to the Chaikin Power Bar. Small cap stocks are somewhat more bullish than large cap stocks. Major indexes are mixed. Let's hit our stock of the day, right? Yesterday, we looked at Copart, and if you took the bearish trade, you did well. Let's look at Visa today. Very bearish stock on weak trend, below the trend line. Now, IT services are a strong group, but what I see here, a potential for a bearish personality change, right? We have a stock that goes from outperforming to underperforming as the power gauge rating turns bearish. Take a look at money flow here. It's been bearish since the April timeframe. Stock nowhere near the highs as it begins to roll over. To me, if you own Visa, if you've had a nice trade from the 130 to 150 range and you see the stock kind of trading around 190, I think you got to take some off the table, right? To me, if you're looking for bearish ideas, you could take a look at a name like Visa. Recognize, though, that vol is still bid. The VIX is still somewhat elevated. So puts are expensive, right? I think you want to look at put spreads if you're taking bearish trades, whether it's on individual names or whether it's even on the indices itself as a hedge, indices themselves, rather, as a hedge on your portfolio. Vol's bid, puts are expensive. But Visa looks pretty compelling as a bearish idea. Let's look at our sector tracker now. The movement of the major sectors over the last 5 days. We have 4 at the top of the list, and it's an eclectic mix. Staples and Utes, right, somewhat defensive in nature. The financials, with earnings, and the financials, we'll take a look at the chart a little bit later on of financials relative to the broader market at a key support level on a relative basis. And we also have comms rounding out the top 4, all up over the past 5 days. Now, let's take a look at the middle of the road. Materials, discretionary, and tech. Tech came under hard pressure yesterday. No two ways about it. Healthcare, right? The growthier parts of healthcare came under pressure yesterday. Industrials, REITs, energy round out the bottom of the list, with industrials and energy being those cyclical names that tried to rally and have subsequently started to roll over, in particular energy. You know how I feel there. My note today obviously goes into a lot more detail on sector rotation and how these themes are playing out from a trend perspective. So dive into the note. If you have it, please take a look. Some interesting thoughts, but not a ton has changed over the past couple of weeks. Now, our industry and focus, mining services, been a mess over the past 6 months, underperforming the S&P by over 15%. However, we do have a bullish power bar ratio, 10 bulls to 3 bears there. Currently ranked number 3 of 21 subsectors, and it's moved up 3 slots over the past week. Some of the names that might be interesting, some of the 3 of the 10 that are bullish. Schnitzer Steel, very bullish. Commercial Metals, CMC. And United States Steel, letter X, all with very bullish Chaikin power gauge ratings. But take a look at the fund itself. Hard to get excited, right? First, it's bearish, right? Now, the trend is strong as retaken the trend line, but money flow has been pretty much bearish. But, I mean, if you take nothing else away from my work, folks, you know the importance we place on relative strength, and just not there yet. Right? Just not there, right? We're starting to see a little bit of relative improvement, but not enough there to get really excited. So we have a bearish fund underperforming the market, overbought with bearish money flow. If this was a stock, I think you know what I would say. So I think it's hard. I think that the metals and mining space, I think you have to drill down. Now, the precious metals miners, right? GDX for gold, very bullish rating. SIL, silver miners, very bullish rating, right? So definitely some bifurcation, right? Big picture miners, XME, we want to avoid. But, precious metals, we want to take a look, I think. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers win. China lifting quarantines on Macau. So win and Las Vegas Sands up 9% and 6% respectively there. Mohawk's been volatile. There's a lawsuit going on, ebbs and flows back and forth, kind of a special situation at this point. Up 8%, tough to get your read. Maxim is being bought by Analog Devices. So you see Maxim up 8%, ADI down 5% on the day. CF, we got some information as it relates to crop reports. CF, obviously important fertilizer company, up 5% on the heels of those crop reports. Loser side of the board, generally speaking, is that growth theme playing out, right? Fortinet software has been one of the big growth areas of the market, has a lot of momentum behind it. Had its wings clipped yesterday. Fortinet down 10%. Dexcom, DXCM, also part of that growth theme, down 8%. PAYC, same story. We talked about ADI already. And then Carnival, nothing company specific in Carnival yesterday. However, the stock did get a downgrade today. So after being down 5.5% yesterday, we'll have to see how it trades today. Let's dive in. Banks kick off earnings season, as I said. Now, JP Morgan is out, and it looks like their results were better than expected. Now, as always, you're going to want to wait for the conference call, especially JP Morgan's call, right? We want to hear what Jamie Dimon has to say about trends, about the economy in general, about JP Morgan's biz. But it does look like JP reported EPS of $1.38 that beat estimates of $1.15 on revs of 33.8 against estimates of 30.4. So top line numbers look okay for JP Morgan. KBE, I don't know. Do you want to call this a bear flag, right? Down, flagging to the upside, and we have to see which way it breaks. Right? A lot of resistance, a lot of work to do overhead. KBE is the bank ETF. It does have a bearish rating here at Chaikin Analytics, right? The RSI of KBE breaking the uptrend line. Now, not fully back into bearish territory, but certainly did break the uptrend. Take a look at KBE relative to SPY, clear downtrend there, trying to rally. I think today is going to be telling just to get a sense of what's going on here in the near term. JP Morgan, the stock itself is trading up about 1.5% as I'm speaking. So we'll have to watch that. Right in this bank earnings season, right? We're also going to hear from Citi today. We're going to hear from Wells Fargo, right? So bank earnings season kicks off as the financials are at a key level in the near term on a relative basis. Take a look at XLF relative to SPY, right? Clear downtrend below the 200-day moving average, right? Declining. RSI and bearish ranges after breaking the uptrend line and staying below 50. Now, XLF, again, is very similar to what we saw in the banks, obviously. Is that a bear flag on an absolute basis at the bottom of the screen, or is it the start of a new uptrend? We don't know the answer, right? We have to wait to see. Now, could the bank earnings reports potentially be a catalyst? Of course, they could potentially be a catalyst, but we're going to have to watch how it plays out. Not there yet. Testing key level, though, right? Take a look at that XLF chart as it tests that key level on a relative basis. So we're going to want to pay attention here to what's happening with the banks. Now, Citi yet to report. Their results are due at 8 a.m. Wells Fargo yet to report. Their results are due at 8 a.m. as well. We did just hear from First Republic, ticker FRC. It looks like they beat on earnings, not getting a good read on the top line number, though. So, big week for earnings, big week for the financials and the banks. So something we're going to want to keep an eye on. Treasuries, as I said, they do remain well bid, right? We talked about this yesterday, and that remains the case. So IEF, the 7 to 10-year Treasury bond ETF, does remain well bid, right? Take a look across the board. Again, these Treasuries are remaining well bid, so that seems to be an interesting dynamic that's at play in the marketplace. That, while equities are trying to find their footing, Treasuries had a good day again yesterday. They remain well bid, right? I think this is an interesting theme, which is why I'm revisiting it here today. Again, take a look at what's going on under the surface across asset classes. I think it's important. I think it's going to be really key going forward. That's going to wrap us up for today. Take us for a test drive, 14-day trial, chaikinanalytics.com/test drive. I'll be back with you tomorrow.